All right. Good morning, good afternoon, depending on where you're tuning in from. Welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully everyone is doing well. We should be live both on Facebook and on YouTube right now, so if you guys can hear me, start typing in VV Nation into the chat. Good morning, Drew. Hopefully you're doing well and having a good day today. VV Nation, there we go. All right, so welcome everybody once again. This is our weekly mobile coaching stream that we do talking about the VectorVest Stock Advisor app. If you're not familiar with it, it's by far the most comprehensive trading tool available to you to allow you to not only analyze any stock at any time, but also manage your portfolio, know when to get into the market, when to get out, and keep yourself protected. So if you've never checked it out, make sure to click on the link down in the description of today's video. You can sign up for the 2-week free trial. And if you're already a current user, well, welcome, and hopefully what we cover here today will help you out with your own trading going forward. Good morning, Cigar. Hopefully you're doing well. All right, so everything looks to be good on both sides. We should be all set there. With that, let's go ahead, as always, jump right into the homepage here. After the homepage, we'll then talk about looking at the market, using support resistance, and how we can benefit from that. And then, as always, we'll finish off with the fan favorite at the very end of analyzing any stock that you guys want to take a look at in less than 10 seconds. So if you have stocks you want to see analyzed, make sure to stick around towards the very end and we'll get those analyzed for you. All right, so looking here at the homepage, right now the Dow is up about 0.5%. NASDAQ is up 1.4%. S&P 500 is up a full percentage point, same as the VectorVest Composite. With the major market indices all in the green, that has pushed our needle 3 ticks into the yellow. Therefore, the market is neutral, and VectorVest does not advocate buying any stocks at this time. If we scroll down a little bit more to get to the color guard, that will give us a description of why we're seeing that there. And so looking at it here, we can see the price of the VectorVest Composite is still lower than what it was compared to 5 trading days earlier. If we look at the RT is actually up week over week or day over day, but still lower week over week. But since it's crossed above that level of once again, we've now seen that green light starting to show up there. And then last but not least, we then take a look at the BSR, the buy to sell ratio, which gives us an indication on the overall market strength. So if it's above 1, that tells us there's more buys than sells in the database, or that there's overall market strength. And as we can see right now, 1.59 shows us that we have those conditions being met here. But if we look at the longer term trend or the weekly trend, we can see we are still down over a week or over the last 5 trading days, indicating less stocks participating in this market rally. Still have strength, but that strength is definitely weakening here. Good morning, Alberta. Hopefully you're doing well this morning. Keaton, VV Nation, there we go. Love seeing VV Nation starting to show up in the chat. All right, so these 3 indicators, the price of the VectorVest Composite, the RT, the buy to sell ratio, are all comprised to come up with the MTI, or the market timing indicator. So the market timing indicator is cast on a scale of 0 to 2, and above 1 tells us the underlying trend of the market is up. Below 1, the underlying trend of the market is down. As we can see, it's currently sitting at 1.24, indicating that the underlying trend of the market still remains up. But if we look back compared to 5 trading days earlier, we can see that we're moving lower overall. So while we still remain in an up situation in the underlying trend, the momentum behind that underlying trend is definitely dissipating, and we're seeing that starting to come back down a little bit. So we'll definitely keep an eye on this as we move forward. And then the next part we look at is the trend column, which shows 2 parts of the trend each and every day. The first part of the trend is what we like to call the primary wave, which shows the short-term or simply weekly trend of the market. As we can see, it is down since the price of the VectorVest Composite is lower than what it was compared to 5 trading days earlier. Second part of the trend is just looking at the MTI, or the underlying trend of the market, and since the MTI is above 1, the underlying trend of the market is up still. And then last but not least, we then finish off with the calls column, which stands for our confirmed calls, and our confirmed calls are by far our most conservative timing system here. They're our last signal we get to get into the market and our last signal we get to get out. And as we can see, we still have a confirmed up situation as of today. Baxter coming from Facebook is saying Tesla had a 3-to-1 split. What is that indicating? That now you have more shares if you hold Tesla. Looking at the advanced declines, as always, we like to take a look at that to see whether or not it's a good day to be buying or not a good day to be buying. When we look at the advanced declines, we can what we typically want to see is a 2-to-1 bias one way or the other. So if the markets are moving higher as they are now, we want to see at least twice as many stocks advancing and declining to indicate that the probability is on our side, that if we bought a stock or replaced a stock today, that we're going to start off seeing some green in it right out of the gate. And right now we're sitting at about 66% of stocks moving higher and about 20% of stocks moving lower. So clearly meeting that 2-to-1 bias. Therefore, if we really needed to pick up a position today, we could potentially do so, but we still want to err on the side of caution. And knowing that we hit the upper extreme with the MTI of 1.6 just a week ago, and now starting to see it coming back down, we just want to be cautious with that and make sure that we adjust our plan appropriately. All right, so with that, let's go ahead, scroll back up to the top, click on the VectorVest composite up here. And what we can see starting off is the basic graph. So I'm going to go ahead and maximize it so that way everybody can see it out there. But we see the price shown in candlesticks. We have a 3 and 8 exponential moving average around the price. You can see indicated in the upper right-hand corner. And then below that, we have the MACD, since we were talking about that for a while the last few weeks. So what we want to do here today is take a look at one of the most popular or psychological indicators out there, and that's support resistance. It's been a while since we've talked about them, but support resistance is by far the best mentality or trader mentality indicator out there, because when you see a level of resistance and the stock doesn't break above it, or for this instance the market doesn't break above that level of resistance, you could expect to see a lot of people that may have bought towards the high of the last point of that resistance level, and then it gets back to that point struggling to break through. So therefore they're more inclined to say, all right, I didn't get out the last time when it was at this point, but I want to get out this time. And then you see everybody dumping, and then the stock heads, or the market starts heading that other direction. So what we're going to do is we're going to go to the graph settings in the upper left and go to support resistance. And I'll enable the support resistance first and foremost. And then what we're going to be looking at, since we're looking more for the current market environments, we're going to be looking at a shorter time frame using 100 bars or 100 days of data rather than looking at 300 or 500. We're going to use price type, the high and low, not just the closing price. Number of touches required, we're going to use this 2. Size of reversals. So, if you're looking for longer time frames, you can most likely use the strong reversals. You want to look for those bigger swings off of those support resistance zones. But if we're going to be looking at shorter time frames, or you're looking for more potential levels of support resistance, you can use the weaker levels or medium levels. What that's really indicating is, once they hit that support resistance zone, how much of a reversal do they have off of that level? So the weaker you bring it, the more opportunities and the more support resistance levels you'll find. However, the weaker the support resistance level, the less probable that level will hold. So you definitely want to be a little bit more cautious if you're using these weaker levels of support resistance. And then the size of the zone, giving you, how much wiggle room around that zone do you want to include? You can use wide, average, or thin. We can go ahead, let's just stick with average for today. And then from that point, enable highlighting, line highlighting, where you want to turn that on so we can see where that zone actually is. And then as well, the broken and unbroken lines. So the broken and unbroken lines are really looking for, a level of support that was holding previously that may have been broken. And then now all of a sudden, it's now treated as a level of resistance. So you want to typically keep broken and unbroken lines, because historically, if you look at support resistance, what was a support floor can now become a resistance level if it broke down below that support floor. And just the opposite, a resistance level, once it breaks through that level, can now become a support floor going forward. So broken and unbroken lines are my personal preference for these settings. And the number of lines shown, we can look at a lot of them, but realistically 2 is plenty enough for me. So when we get out of here, and then we'll zoom into a 6-month time frame, looking at support resistance zones here, we can see here's that support or resistance zone we had back around from the end of May till about the middle of June. Coming in July, we finally broke above that around the middle of July. Then we have this level of support resistance shown here. And then as you can see, we actually hit that high support resistance zone back here at around, what is that, 50, actually, let's see. What's that high point there? 59.36. So 59.40, we'll call it. So you have that resistance level we hit right there and then pulled back, broke right through this level of support, and now retesting this level of support. So for anybody who's not been following along with what's going on in the market, hold on, I'll maximize that here. For anybody who has not been following what's going on in the markets, we do have the Fed speaking, or Jerome Powell speaking tomorrow, I believe at 10 a.m. They have the Jackson Hole Symposium going on with all the world top bankers and Federal Reserves or their equivalents, all in there. New subscriber coming in, Bombix, welcome, glad to have you here. So with all the heads of the world banking all meeting here, there's a lot that can be discussed, and with Jerome Powell going to be talking, as we know, the Fed, or whenever he talks, that can either make the market shoot up and move higher, or they can come tumbling back down. So that's why we can look at support resistance to see or get a gauge of where we can actually use or where we could actually keep an eye on for key levels. So that way, if we see a breakdown of these key levels, we know to either protect our profits if we're holding long positions, or to maybe add some defensive measures. Or if we start seeing it bouncing off, breaking through resistance levels, then we know we could potentially start adding more to our positions as well. Kunga coming in asking, your YouTube screen is quite fuzzy on my Android phone. So Kunga, unfortunately, I can't control what it shows like on your phone. You would have to click on that little gear on the YouTube video, and you can get to settings and you can change your resolution there. That would be something you would have to set on your phone. Unfortunately, I can't control that. I have it set to display at 1080. So you shouldn't be having any blurriness or fuzziness. So make sure that your resolution settings are turned up so that way it doesn't show up as blurry. If you're using a mobile device and you're on just cell data, sometimes they will limit that or throttle that to 480 instead of the full 1080. So you may have to make sure that that's changed there. Appreciate that, Roy. All right, Rick here today, Rick. Hopefully you're doing well. Apparently I missed some comments. Let me go check that out. Okay, there we go. Perfect. All right, so what we're looking for is this level of support. You can see it's highlighting all the times we've had touches. So we've had 1, 2, 3, 4, 5, 6 touches so far in this support resistance zone. We pulled back, hit that level just 2 days ago. So that would have been Tuesday. And now bouncing off of that support zone that we've been looking at, starting to head higher, closer to that 58.10 level that we've had 2 touches on, meeting the bear requirements there. So this is more of a weaker level of support resistance. So we can keep an eye on that, see if we get to that level. But realistically, if tomorrow comes out and we have no problem. If tomorrow comes out and we have the Fed acting dovish and the markets start to take off, he says maybe we're not going to raise interest rates as much as we were expecting to, whatever their causes, if they come out with some positive news and giving a more dovish tone, we could see the markets taking off. And then at that point, we're looking to see if the markets can retest and break through this level of resistance up here at around that 59.40 level. But the key level to keep an eye on, if you're wanting to keep yourself protected and worried about some of the profits that you have in your positions and worried about the overall market. We've talked about it a lot during other live streams. We've talked about it a lot here. This is just a bear market rally and we start seeing the market rolling back over. You don't want to be stuck in long positions sitting through that. If you've been holding long positions since the beginning of this year till the middle of June, really, it hasn't been a fun time in the markets. So if a second bear market or a second sell-off does occur, you want to make sure that you're protected and playing the market to the downside rather than having to sit through potentially an even more severe correction. So what key level would give us that indication to make it more systematic, telling us, hey, now is the time we need to protect our positions, we need to protect our profits, maybe take some defensive actions such as buying a put to potentially hedge your position, selling a call, adding a contra ETF, whatever fits your style of investing. What is that systematic level or systematic way of identifying when you should be doing so? Well, that's where this support floor comes into play that we were just talking about. So let me click on that. There we go. So right around 57 roughly on the VectorVest composite. So right around 57 on the VectorVest composite is going to be that key support floor that we want to keep an eye on. And if we can see that the support floor can hold and that we start to move higher, then obviously, we keep our long positions. Everything looks good until we get closer to that level of resistance at 59.40. But if we break below 57 on the VectorVest composite, that is where you'll want to start taking defensive actions and making it more of a systematic approach. That way you're not getting caught off guard or you're not freezing like a deer in headlights. Because if we break that 57 level of support, then our next support level doesn't come in until all the way down here. Oh, come on. There we go. All the way down here at 54. Now, that may not seem like that big of a deal because it's only a $3 difference on the VectorVest composite. But you have to remember, that's an indexed average. So while that is down $3, that move on individual stocks could be much more. Could be less, but on average, 50% of those are going to be more than that or a bigger move than that. Available in the app or in the browser. Yeah, Sadiq. So this is all based off everything that's included with the app that you can see right here. You can also do this in the VectorVest 7 software as well. So that's the great thing about it. When we go back to the settings, going and taking a look at the support resistance, VectorVest or the stock advisory app will automatically draw those support resistance zones and levels for you. All you have to do is tell it what settings you want to use. It has some default settings that you can use to get started, but as we talked about earlier, what you're looking for at least short term or for the current markets for this most recent rally, you don't want to look at 300 bars, which is over a year's worth of data, or 500 bars, which is 2 years worth of data. So therefore, 100 bars is going to give you a nice summary of what's going on right now. And then number of touches required, 2 is the bare minimum I would ever recommend. Obviously, you could do more than that to make it a stronger level. But then the size of reversals, you have strong, medium, or weak. I chose weak so that way we have more options or more opportunities. But let's go ahead actually change that from medium, or change that to medium, and also change the size of the zones to wide. And then one other thing, the broken, unbroken lines is also an important aspect to keep an eye on here. So let's do this actually. One more thing I want to change. Go back, graph settings. Here we go. Take that off. There we go. All right, so I've changed my settings up a little bit. And if you've noticed, that 58 level of resistance is now gone. So by changing my settings and making the size of reversal from weak to average, I have taken away that 58 level of resistance. I still keep this stronger level of resistance we were talking about here down at the 57 roughly level of support. But now I take out that middle ground. And you can see it's pretty much been spot on with what's been going on. We hit that zone as of the last few days when it gapped down, but we still haven't broken out of that zone. If we break out of 58, that would indicate that we have that potential to move higher towards that next level of resistance right around 59.40 or so. So this may be a little bit cleaner for a lot of people to understand, or a little bit cleaner to implement. And then looking at it though, you still have that support floor down here, a little bit higher, roughly right around 55 and some change. So this may make it a little bit easier, but at the same time, the same rules would apply. If tomorrow comes out, Jerome Powell is hawkish, markets start moving lower off of that news or off of his conference or announcements there, expect to see this 57 level and see if it can hold or see if it breaks down below that point. If it breaks down below that point, once again, that is a systematic way to understand or to tell yourself, hey, now I need to take defensive action if I haven't done so already. So there you go. Hopefully that's doing better for you, Maria. All right. Thanks. Can you find support resistance analysis on a stock, not on the VectorVest composite? Yes. So if we go out of here, this can also be applied. We were looking at it from an overall market standpoint, but the same analysis can be applied on individual stocks as well. So if we go down, actually, let's go into the stock pick ideas. Take a look at the overall top rated VST stocks, just using this as an example for right now. Very top VST stock, as you can see, you had support resistance down here. You broke through that, came back, retested as a new support floor, and then rallied up to where it is now. So because it's gone pretty much parabolic and straight up, you don't really have any levels that can be identified as support resistance levels at this point, because you don't have any sideways moves. You only have one touch at best. So on a parabolic stock, maybe you'll use that one touch, but preferably you typically want to see at least 2 or more touches on that support resistance zone. If we get out of this one, go to the next. Super micro. You can see. All right, so Sadiq coming in as a new subscriber. Welcome, Sadiq. Welcome to the VV Nation. So looking at super micro, this is a great example of, that crowd mentality indicator here. So you had people buying in all throughout these points, broke through that level of resistance, hit here. At this point, this level of resistance, though, come on, highlight. This level of resistance wasn't a level of resistance at that point. So all of a sudden, you had the stock pulling back off of that high, came back up and hit that level once again right there. Now, everybody who got in back down in here and didn't sell at that point are thinking, oh no, I missed my opportunity to sell that first time it was at this level, so I'm going to make sure I lock my profits in at this point. I don't want to risk, giving up all these gains. So what did you see happen to the price? It never broke above that level of resistance and then came tumbling back down. That's what it means to be a crowd mentality indicator. You see the psychology behind individual investors, and you can see the psychology behind the trades. People were panicking that it wasn't going to go higher and they didn't sell the first time. So then everybody tried to dump their shares, which drives the price down and drives it down quickly. All of a sudden, you get down well below any other support resistance zone at that point before you start finding some actual buying coming in. And this is where you could add on volume. So if we go ahead, change our graph up a little bit, put on volume here. Volume can help confirm those breakouts. So when you're moving lower, you had big volume on that up day, volume was selling off there. Look at that peak. When it got back to that high that we were at previously, look how volume was ramping up, indicating that people were protecting their profits and people were, moving on from that position. And that's when you saw the stock starting to come down. Then you saw a spike in volume here, which indicates you're getting close to that low. You see, or you're around a low point for that stock. Then you see another spike in volume on a bullish candlestick day. Stock started reversing, started moving higher. So this is where you can now not only take support resistance, but also enhance it and get more added insight to make a more informed decision using the volume down at the bottom as well. Be a contrarian, don't necessarily follow the crowd. Hey, well, I mean, money goes where money grows. And yes, contrarian plays, when they hit, they can definitely pay out a lot more. But contrarian plays can also fail a lot more than following the crowd or going with the overall trend. So there is that. You can play contrarian plays, but if you don't have proper money management rules in place to take it or specific to that style of trade, then you're going to lose a lot of money. Just as, if you're following the crowd mentality and you're taking that overall trade, if your money management rules don't, reflect that specific style of trade, then yeah, your plan doesn't match up and you're going to have some issues and maybe not make money with the trade. So you want to make sure everything's in sync. If you're going to be, an aggressive trader, you want to make sure you have aggressive money management rules so you can take on that risk, but still reduce your risk by using the money management aspect. All right. So with that, Bill's asking, what is the support? Is it at 58.35 or 59.40? For this one, are you talking about for this one, Bill? This level here, let's see. Let's go to this one. Let's see, where is it at? Where did this stock open at? Opened at 56.65, so roughly right around 56.65. So hopefully that answers your question on that. All right, so with that, if you guys have questions regarding support resistance, feel free to let me know. Also, if you guys want to see your stocks analyzed, make sure first and foremost you smash that like button below the video. Also, if you're not a subscriber, make sure to subscribe to the YouTube channel right now, so that way you can be part of VV Nation. Also, grow in the community and get notified on all the live content that we have coming out for you on a regular basis. And after you've done all that, then you can put in your stock request into the chat, and I will be glad to start analyzing those for you. All right, so let's get out of here. Go back to the home, or go back to the main page. There we go. Click on the little magnifying glass in the upper right. Good morning, Chris. Hopefully you're doing well. SIGA, let's go see. So SIGA, as always, first and foremost, let's start off by analyzing the stock together. So below that little quick mini graph, you can see 4 indicators, and they're all going to be cast on a scale of 0 to 2. Above 1 is good and below 1 is bad. The first indicator we look at is the RV, or relative value, which is looking at the long-term potential or the long-term upside potential in the stock over the next 1 to 3 years. Since it's above 1, that tells us this stock has good long-term potential over the next 1 to 3 years. The next one is the RS, or relative safety, which is the amount of risk involved in the stock. So if it's above 1, that indicates less risk associated with it. Below 1 would indicate more risk associated with it. SIGA, slightly above 1, so slightly less risk compared to the average stock out there. The third indicator is going to be more of that technical indicator, or the relative timing, which is looking at the short-term price trend of the stock. So if it's above 1, that tells us the short-term trend of the stock is up. Below 1, the short-term trend of the stock is down. So at 1.11, the short-term trend of the stock is just slightly up right now. Last but not least, these 3 indicators are comprised to come up with our master indicator, VST, standing for value, safety, and timing. It's something you're not going to find anywhere else. And once again, since it's on a scaling of 0 to 2, above 1 would indicate that the stock is favorable currently on both a fundamental and a technical basis. So SIGA has a lot of positive news. Stocks dropped the last few sessions. Most likely it is profit taking. You look at the stock, we can see it's gone up from, once we broke out of that level of resistance, it's gone up from roughly $15 a share all the way up to 28, now pulling back down to 18 or 19 roughly. So yeah, it could be, a lot of people protecting their profits that got in when you look at the volume increases really back here at 8. So you've almost, You've over tripled your money in a matter of a few months. So yeah, you're definitely going to see a lot of profit taking going on during those periods. Now, also take into account what the overall market is doing. We saw a peak in the VectorVest, or the MTI, around the same time we saw SIGA peak. Also, keep in mind, there's that popular theory out there where you buy the rumor and sell the news. If the news is finally coming out, people are buying into it on the rumor. The news is actually out. People could be profit taking based off the actual news. So yeah, it looks more like profit taking more so than anything else. Good stock. It's done extremely well over the last 3 to 4 months. At the same time, you have to understand, investing isn't a team sport. It's an individual game. When people are getting in, they're basing it off of their entry price. So most likely you are going to see people protecting their profits at these points. and therefore waiting for new opportunities. If you're not already into it, keep it on your radar, wait for it, turn around. But right now, definitely, as it's pulling back, not the right time to be adding more to your portfolio. All right, let's go see what else we have. PFE. So Pfizer. Now, this is how easy the VectorVest Stock Advisory app can make analyzing any stock. Once you're comfortable with the indicators, all it takes is a matter of seconds. So starting off with Pfizer, you have great long-term potential. You have less risk associated with the stock. However, the stock is moving lower. Overall, it's a good stock, but right now is not the time to be long in it. Less than 10 seconds to get all the information I need to make an informed decision on whether or not I should be getting into it or whether or not I should not be getting into it. So all of it right there in a matter of seconds. Nowhere else out there is going to make analyzing any stock as easy as that is. So let's go ahead and take a look at the next one, JWN. Also, I will state this as well. Since the VST is a combination of RV, RS, and RT all summarized into one, RT is the most important out of those three in that calculation. It gets the most weighting as well. And the reason why RT is the most important is because it doesn't matter how good the stock is fundamentally, if it's moving lower, it doesn't make sense to own it. You want to be buying rising stocks and rising markets, and the RT tells us exactly that. So even if it has the best fundamentals out there, if the RT is still below 1 and the overall VST is above 1, that tells us still right now is not the best time to add it. Maybe keep it on your radar, wait for that turnaround, but we shouldn't be buying it or shouldn't be holding it if it has an RT value below that level of 1. All right, so looking at Nordstrom, JWN, has great long-term potential, but does have a lot of risk associated with it. You're in a steady decline. Overall, the stock is average at best. No problem, Tashar. Let's see what else we got. UROI. Poor long-term potential, a lot of risk associated with it. You're in a slight uptrend on a short-term basis, but not enough to offset the amount of risk involved in the stock. So therefore, the stock is not favorable. Does the app send out alerts as of yet if your signals change, for example, stocks move? So Sadiq, it doesn't send alerts based off of the recommendations yet. That is something that I've requested, but you can set up alerts inside the app that it'll notify you using app notifications. For example, UROI. If I tapped on that little bell icon next to the price, I can set up a new alert and I can use a line, put it wherever I want to, or put in the price manually. And when it breaks above or below, depending on what you're setting up, it'll send that in-app notification, or you get that little notification, at the top of your phone whenever that is triggered. So you do have that capability as well. Tesla. All right. We've seen a lot of people asking about Tesla. I know Tesla did have the stock split today, so let's go take a look. Tesla, first and foremost, let's analyze it together. Stock has great long-term potential, less risk associated with it. It's in a nice, steady short-term uptrend. Overall, the stock is favorable. Now, it did have that split, so therefore it has come down in price. But from what we've seen with most splits over this last few months or so, is initially right out of the gate, once the stock splits, it pulls back for the first few days, and then it starts to make those moves higher. So if we go take a look at Tesla on the chart, we can see we need to wait till the end of the day to have all that split data taken control of. Or taken into effect. Let's go 1 day. So looking at it on a 1 day, using support resistance, we broke through that support floor here. Broke through this support floor at around 293. They are 293.90 roughly, and continuing to move lower. Once again, this has been standard for most of them. If we go take a look, I'm not going to analyze the stocks, but let's just go take a look at Amazon, who had a split recently. Let's go 3 months. Here was the split date right at that high. Where was that? On the 6th of June. Then you saw the next few days started to pull back. Then finally started making its moves higher, beating that previous high on the split date. Go take a look at, what's another one? Google. Okay. What date was the Google split date on? Trying to remember. Yeah, Jim, all of these are recorded, so you can go back on our Facebook or our YouTube channel and watch the replays of those after the live stream ends. Let me figure out 1 second here. Trying to remember the exact date. There we go. All right, split was on the 18th of July, so let's find 18th of July right here. Moved sideways, then started moving lower for the next few days before it started rallying up. So that just goes to show, a lot of these big tech names, they have that drop right after the initial split for the next few days, and then they start to make their legs higher. So no surprise to see Tesla pulling back with that, with the split today. So keep an eye on it over the next few days. Wait to see if you can find some better opportunities or some more consistent reversal signs before jumping on. But yeah, that's what we've seen. So it seems to be following the pattern of all the other major tech stocks that have had splits recently as well. All right, NVIDIA. So if I'm not mistaken, they just missed earnings yesterday, but analyzing this stock has good long-term potential, less risk associated with it. The timing is basically flat. However, overall, the stock is favorable, but with the timing, I want to see it. My personal recommendation is waiting for it to be 1.1 or higher. Anything between 1 and 1.09 just tells us the stock's really just treading water, moving sideways more so than having a nice steady uptrend. But looking at the chart, the timing at 1.1 or 1.02 isn't very strong. If we zoom out, you still have over the last 6 months, lower highs, lower lows. You do see the market, you do see NVIDIA trying to make a rally here, but until we can break this level of resistance, since we've been talking about that here today, right around 190 roughly, until we can see it break that level of resistance, we should still err on the side of caution here. Yell, Y-E-L-L. So Yell, good long-term potential, but does have a lot of risk associated with it. You're in a really strong short-term uptrend. Overall, the stock is favorable right now. So this is more of an aggressive trade. So if you're an aggressive trader, this is a good stock to keep an eye on. HHS. No, for the VectorVest composite. Okay, we can go take a look at that in a second there for you. Revisit that again. So HHS, great long-term potential, but does have more risk than the average stock out there. You're in a really strong short-term uptrend. Overall, the stock is favorable. This is an aggressive stock. When you have an RV greater than 1 and an RS less than 1, that identifies the stock as an aggressive stock. So therefore, make sure your trading plan is geared towards trading those faster movers, more aggressive plays. If you're using conservative stops, but trying to trade these high flyers or these high momentum stocks, you're most likely going to end up losing money because you're using too wide of stops on something that can move so quickly. So as long as you're comfortable trading these and you understand it is an aggressive stock and your stop criteria, your money management rules are adjusted appropriately for it, by all means, have fun. But if it's not, maybe you need to revisit your trading plan and make sure everything is in sync there, if you will. All right, let's see. What else do we have? We just did Tesla. Oh yeah, VectorVest composites. Let's go back to the homepage real fast. Market overview, click on the VectorVest composite. So this level of resistance right here, let's see. Where is that? So the high price, 59.36. So I would call that 59.40 just to make it simple to round numbers there. But 59.36, 59.40 would be that level of resistance. So you draw that on there, and don't forget, it's not an exact number. Support resistance is never an exact number. That's why when you tap on these, let's go tap on that one, you see that shaded area above and below that support resistance line, because that is that support resistance zone. And as long as it gets within that zone, then that is, considered a touch on that support resistance. It doesn't have to get exactly to that number to be considered a touch. It just has to get within that zone to be classified as a data point for that line there. All right, so hopefully that answers your question on that one. All right, let's see. So, Tapan, as we just talked about, we just went over that. Right now with Tesla, we have to wait for the split data. The split just occurred today, so the data will be split adjusted in the database most likely this evening. So therefore, we have to wait for the end of day data, so that way everything is split adjusted, so we can properly use support resistance on it there. All right, we got one more here. We'll do INTU. And looking at INTU, this one, good long-term potential. You have less risk associated with it. You're in a steady short-term uptrend. Overall, the stock is favorable. All right, we got a couple more. We'll do two more here for today, and then we'll start wrapping it up. So AMD, good long-term potential, less risk associated with it. You have a steady short-term uptrend. Overall, the stock is definitely favorable. Then SMH. So ETFs. With ETFs, VectorVest makes analyzing any of them extremely easy. With an ETF, you don't have quarterly reports or financial statements that you have to put out. So therefore, the fundamental indicators of the RV and RS indicators are always going to be pegged at 1. Therefore, whenever analyzing an ETF, all you have to do is look at the RT. If it's above 1, that tells us the ETF is favorable. Below 1, the ETF is unfavorable. So at 1.22, that tells us this ETF is in an uptrend or making money. Therefore, the ETF is favorable currently. If we go take a look at the chart real fast, we can see we had this support resistance zone or support zone here that we're keeping an eye on. Oh, trying to get it highlighted. There we go. So we're keeping an eye on that support zone. We can see we did come down, touch that just recently, starting to bounce off. So let's see if we can get outside of that zone before we start making moves on that one. If we wanted to, we can go to the graph settings, change the lower indicator to RT, and look at what RT has been doing. RT has been pulling back a little bit. No real signs, or actually with RT hitting a lower low compared to this low right back in here. Let's find that date. There we go. Actually, let's maximize it. Makes it a little easier. I got big fingers, so using it. So there you have a new low being formed, being confirmed by the price action as well. So therefore, it's still above 1, but starting to move lower. Keep an eye on that. You definitely, as it moves closer to that level of 1, you don't want to be, you want to be tightening up your stops. You don't want to be adding more. So that way, if it does break below that level of 1, you've locked your profit in rather than giving it all back or turning a systematic plan into an emotional trading plan. All right, so on that note, if I didn't get to analyze your stocks, I do apologize. But if you're already a subscriber with us, all you have to do is sign into the app, click on the little magnifying glass in the upper right-hand corner, and you can type in any symbol you want and analyze it just like we have here, wherever you're at on the go. If you're not a subscriber, make sure, as I stated at the very beginning, click on the link down in the description of today's video. Sign up for the 2-week free trial. Put it to the test. As the old saying goes, seeing is believing. So last but not least, let's go take a look, see where the markets are now. And looking at it, the Dow is now barely break even. The NASDAQ has been cut down almost by 50% so far this morning, down to 0.7% higher. S&P 500 also been cut down about half of its high that we were at the beginning of the session. Now only up about 0.5%. VectorVest Composite only up about 0.6%. So therefore, we have seen the major indices pulling back currently. We're still 3 ticks into the yellow. Looking at the RT is bouncing right around that level of 1. So keep an eye on it. If we look at the advances and declines, we can see the advances have been pulling back a little bit, now up to 62%. The decliners have really been picking up their pace, now up to 26% roughly. So with that, we have seen that 3-to-1 ratio between the advances and declines now turning closer to 2-to-1, still in positive territory, but wait until you start seeing that pulling back or start, favoring the advances again. Also, keep an eye on the color guard. The color guard will analyze the market and tell you exactly what's going on, so that way you can make the best decisions for your own portfolio. If you don't want to spend the time every night doing this on your own, I highly recommend watch the daily color guard report. It's about a 10-minute long video, roughly 10 to 15 minutes long, Monday through Friday or Monday through Thursday, a little bit longer on Fridays, but we recap what's going on in the market today, what news you need to be aware of for tomorrow, what headlines you need to keep an eye on, and how to prepare yourself for the next trading day. In essence, watching just simply that market update video will make sure that you never get caught off guard and will keep you on the right side of the market. From somebody who's been working with our customers and subscribers for well over 10 years now, that is by far the one thing I've gotten back consistently from people that I've worked with is, just simply adding that one new thing of watching that video on a nightly basis. That has been one of the biggest benefits a lot of people have found getting started, or especially if they're newer to the software, newer to the VectorVest system. So if you haven't already done so, I highly recommend doing that. So on that note, it's been my pleasure being with you guys here today. Don't forget, we do have Glenn Tompkins coming on for Trending Thursdays at 2 p.m. Eastern today, where he's going to talk about all the major headlines that are impacting the markets. So if you want to see what news is driving the markets and what's having a major push in these current environments, make sure to come hang out at 2 p.m. with Glenn, and he'll make sure you guys get treated well as well, or during that time as well. So on that, thank you all for tuning in here today. Have a great rest of your trading day. Have a great weekend. And until next time, take care, adios, and toodles.